So hello and welcome everyone. I hope everyone can listen and see me and definitely see the speakers also. You can, speak and Deepa, you can make them panelists.
Sure.
Is everybody able to see and listen to me? Okay. Excellent. Great. We got a yes. Okay. Excellent. So thanks for confirming on the chat. However, here during the discussion table, you can speak, okay, and discuss your questions. And to make this discussion more interactive, it would be great if everyone can switch on their cameras. This will allow for an excellent engagement in this discussion table, and build a stronger sense of community. Deepa is giving rights to everyone so that you can switch on your camera. Let's see some participants audience switching on their camera. This was one of the feedbacks that we used to receive, that we should be allowed to speak and see the other alumni. So here's an opportunity so to speak, interact with the other alumni. So let's switch on your camera, and Deepa, let's make them panelists quickly. All right, so this is the third discussion table. The first one was on full-time day traders. The second one was on deployed algo trading strategies. If you haven't attended the last two and would like to see the recording, it's available on your alumni portal. You can access it on accounts.quantinsti.com. Okay, why are we doing the discussion table? We believe that we have an obligation to help and support the EPAT alumni. The whole idea is to bring you all together to network. Group discussions are also a tool for arriving at solutions to problems that you may be seeking. Okay, the best thing a human can do is to help another human being know more. A topic for today is ML in trading. As you know, the financial industry has seen a surge in the use of artificial intelligence and data analytics to make better investment decisions. With the rise of big data and proliferation of powerful computing technology, many traders are turning to algorithms to help them make more informed decisions. The use of advanced algorithms and data-driven strategies has become increasingly important in today's financial markets. So today we have few alumni who have come forward to share about how they have used or are using machine learning in trading. Okay, so the duration of the entire session is about 60 to 75 minutes. You can write down your questions, and once the speaker has finished sharing, you may start the discussion or the questions that you would want to ask. Again, you can keep your cameras on and speak and ask questions. We would like to thank the EPAT alumni who have come forward as speakers to share about their use of machine learning in trading. Before we start, the speaker can just introduce themselves in just one line, and then they can start and share about the pointers we have shared with them. All right, we will go ahead with Renato first. Hi, Renato. Welcome to the discussion table.
Hi. Thank you very much for having me here. It's a pleasure, as always, with anything organized by QuantInsti. Yeah, I am a quantitative developer. I work for a commodity trading firm in London. And yeah, in my, let's say, personal projects, I also do some quantitative stuff like trading and platforms for yeah, executing quantitative trading. So yeah, I will start my sharing my experience by saying that the reason why I let's say start using machine learning in trading is that machine learning is a very powerful way to let's say abstract decisions away, so that you let's say get out emotions from any decision. Machine learning, after all, is statistics, and we know that any statistical approach is sometimes within the quantitative trader community, statistics is what makes us proud of being ahead of any other approach, like could be fundamentals or technical analysis. Although there's no one truth, we know that the markets are unpredictable, but machine learning is for sure one tool that allows to be smart on making decisions about trading. And so my background was within data and engineering in general. So machine learning falls within that field very in a very let's say precise way, which is you need to have some skills about programming, solving problems. Data collection is a very hard part of machine learning, and it must be done right. Remember, your systems are garbage in, garbage out. If you feed in bad data, you will have bad results, no matter how smart your algorithm or model can be. So the data collection, the data you, the quality of the data that you decide to fit in is very important. And this depends on your skills, how you collect the data, what checks you have on the data, what are your data cleaning pipelines and data preparation pipelines. That's all something that, yes, has to do with data, but essentially is a software developer, field. That one of building very smart, clever, and functional pipelines. So this was my background. I want to recall I'm an energy engineer, but I kind of then delved into anything programming and data analysis and machine learning. So now that really fits very well with my current role where I work, because it puts together any energy generation, let's say, background with anything that has to do with quantitative development. So when you have let's say a trading strategy that's based on machine learning, as we say, for sure the most important thing is your data pipeline, collection, cleaning, and how you load the data and how you use that data to feed the model. Up to that point is very important. Then comes the model itself, which needs to be fit for the purpose of your trading strategy. And I will include between these skills also some SQL capabilities, because most of the time that's my experience in my current workplace, you are usually exposed to data vendors APIs, or you have, through these data vendors, you have access to some databases, usually relational databases. So different flavors of SQL. It can be Microsoft SQL Server, it can be MySQL, it can be Snowflake, whatever. They're all common, but SQL is for sure one of the things that you want to possess as your competence, because most of the data is maybe queried through SQL other than proprietary APIs. The juice is the same. You need to make sense of how you collect the data. Now, SQL is just a way to do it, but essentially what you want to do is to understand completely what's going on with your data from the point you load the data to feeding the data, either within your production model or whilst you're doing your studies about optimizing and building your model. So that's about, let's say, the environment and skill set that you need for using machine learning into trading. it's not different than any other application field. If you were doing it for predicting, you know, the time Uber takes to get to your what do you call it? It's almost the same. So this is not specific to trading. Actually, in trading, unless you're doing some very complicated job with the kind of data, alternative data, the data you are querying is pretty basic. It may be just prices about assets, and that is, we know the OpenAI low close volume type of data is very simple to make sense of. But of course, if you are expanding that domain, you know, more complex things come, like alternative data, like scraping companies' websites for financial information, or sentiment analysis, which, you know, brings a completely different field in, which is the one of natural language processing. But yeah, most of the time is not the hardest, let's say, it's not the hardest field of application for machine learning. That said, my advice for whoever wants to, you know, dive into the use of machine learning in trading is to know any major tool. I know that most of you guys use Python, and for sure Python is a very powerful tool for these kind of applications. And within Python environment, there are very famous tools like Pandas, NumPy, and you need to know very well this, how to build a data frame, and then SQL, and NumPy for understanding arrays operation to speed up your pipeline. And then there are other tools that allow you to parallelize these kind of things. Also, parallelization is so concurrent, and parallel processing is something that you want to have an understanding of if you want to build a very efficient and performant system. And that's very easy to, let's say, implement in Python. But then there are also tools that allow you to compute your data sets in a parallelized way, in a distributed way. There are many tools like Dask or Mamba. Yeah, but those are, let's say, more advanced tools that you will discover when you really have the need to get to that level of performance. So this is, let's say, about the environment and the expertise you need. For what concerns my personal, let's say, points I want to bring up during this conversation is that first, free your mind from the assumption that you can use machine learning just for producing predictive signals. That's not true. Like I personally use in my day-to-day work, I use machine learning for, let's say, producing forecasts for combined heat and power technology production, or usage of nuclear power plants, that then gets fed into the, you know, the machine, actually an optimization problem of supply and demand to price a commodity like power. So machine learning, and this is to give, let's say, some broader vision to the ones who are here more for software development in general within trading and algo trading. Machine learning is not just to produce your buy and sell signal, or how, or to, I don't know, to price your size on the bet, which is one of the latest trends. It's called meta labeling. But you can use machine learning also to build other models, and this is in commodity trading is so common. You can use machine learning to predict demand of power, and you know, forecast productions. These values will feed into your model. That can be a linear model or can be another machine learning model. It doesn't matter. But machine learning is used also for that stuff. And so, you know, there's a broader application field for machine learning. So yeah, be aware of, you know, the wider possibilities for machine learning. That said, Another point I would like really to point out, which is to me the most important, is that probably 70–80% of machine learning, like the success of your model, will not be the model itself or how cool is your model, but how you can extract information from the data. And trust me, the best knowledge and skills you can, let's say, leverage for this is linear algebra. Understanding what information your data include is your top priority. And there are techniques that allow you to, let's say, exploit these components into data. One of these is, let's say, for example, principal component analysis. It's one. This really makes the difference when you feed your data into your model. There are many factors to consider, like non-linearity, trends, noise you have, noise to information ratio, but it all boils down to you understanding the space of your data. And the space of your data is nothing else than knowing some fundamentals of linear algebra, like I don't know, correlation matrix, eigenvalues, eigenvectors, knowing what's the way to express your data so that your data manifests the most information. And it's there that you will make the most out of your data, and your model will be able to make decisions that are sound on the base of that data. One of the best readings about this, it's very complicated, it's advanced, but you can also read at a very surface level to just understand these elements of statistical learning. It's a book that was published probably in the 80s or 90s, and it really, from a mathematical point of view, shows how literally any machine learning model works behind the scenes. And in a book like that, in readings like that, you will understand that data needs to be, let's say, shaped in a way that shows information. Otherwise, no model will work. It will work, it will produce signals, but they won't be reliable. And that's the first point I really want to, let's say, bring here, because it's where you should spend most of your effort if you want to, learn subjects and matters about machine learning. And then, also, this is more specific to trading, and with this I will, let's say, close my my time here. There's a bias in people doing quantitative trading and using just time series data based on, let's say, constant time sampling, like the usual time series we see. Actually, there are many advocates. The main one is De Prado. He's a very, I think, is very smart and clever person, and he's doing a lot of studies, and I suggest to read his books, Advances in Machine Learning, Financial Machine Learning, where he talks about sampling data based on other parameters. Sorry?
Go on.
I heard something. Where he basically exposed some other techniques, like price sample based on volume, or dollar value, which is just slightly different. But basically, the assumptions at the core of this is that saying that your frequency of sampling doesn't really include any information. It is indeed the information coming into the market is exposed through change into volume, and so you shouldn't sample data every hour or every 6 hours or every day, but you should also explore sampling data based on threshold of volume. That means that you, from the tick data, you will sample one new row every time you hit a new level of volume or dollar value, which is the value of the asset at that point times the value, and so that you come out with a completely different data set, which has no let's say constant frequency simply on the index. It will have a timestamp if you have access to on the index, but actually the new row will come just every time you go over that threshold of volume and or dollar value, which basically tells you here when this new row comes means that information into the market has arrived, new traders access the market and transacted, and so you should take these as, let's say, information to make your decisions, not a constant sampling every hour, every 2 hours. So these are just new trends which I think are very interesting, worth to explore in your studies and strategies, let's say ideation and backtesting, because I mean they come from people who manage billions of investment by using these techniques, and so yeah, I think that's enough for me.
All right, great. Thank you for sharing, Renato. If anybody has got any questions, we can start the discussion. Anybody wants to ask Renato anything specifically about his talk or his matter that he has spoken about, can please ask. You can unmute yourself and ask.
Hi, Renato.
Yeah.
So thanks for sharing all that very important information.
No worries.
So I see you're recommending books by Marcos Leprado. So have you found any other interesting or useful content from any other author other than Leprado?
So sorry, can you repeat the questions?
Yes. So I see you're recommending Advances in Financial Engineering by Leprado. Yeah, I've gone through his research and his books as well. I was just wondering if you have any other recommendations from other authors other than Marcos Leprado.
There's actually a very interesting book that I probably can show you that I just finished reading. It's very, very, let me see. It's completely different. It's called Trading Systems. It really, I can show you the Trading Systems.
Oh, okay.
This book is very interesting because it really gives you an overview of how, let's say, what are the usual and minimum approaches and techniques you need to use for building a trading system. And yeah,
okay.
it's.
Is it by Perry Kaufman?
No, this is from Urban Jekyll and Emilio Tomasini.
Okay, I'll find that. Thank you.
Yeah, no worries. Anything that has to do with machine learning, linear algebra and machine learning, exploiting data information is good for you. And anything that has to do with trading, algorithmic trading in terms of how you size your bet or how you monitor your optimization of the strategy, I think is gold.
Good to know. Thank you.
No worries.
Okay, thanks. All right. So if there's no questions, we can move to Karthik now.
One more here. Hi, Renato.
Yeah, sure.
The models that you are using, machine learning models that you're using for trading, so which time frame mostly you are using? Like it's a higher time frame, or we can go to even the lower time frame?
Yeah. I don't understand your question. Yeah, by the model itself.
No. So using machine learning, which lower time frame you have traded successfully? Like, does it work? Yeah.
I think there's I mean it gets tricky when you want to predict signals like buy and sell on very granular time frames. I think machine learning models are so regardless of the time frame, it can be even 5 minutes or 1 hour. I think the best application field is to use the models to find out momentums or let's say movements within the market that last longer than just the bicycle. I think timestamp.
Hello, hi. Somebody can just switch off. Switch off. Yeah, thanks.
So yeah, not really any limit on the time frame. On the I use also 6 hours, 4 hours, 6 hours.
Does that answer your query? Anybody?
Can I ask a question?
Yeah, sure. Go ahead.
Yeah. Hello, Renato. Good afternoon for you, I think. Yeah. You told a lot about data and the importance of data and to pick the data in a way that already presents information instead of just putting regular data in the model. Can you share with us some trivial transformation data that you discovered that it was a good way to model one of the information that you use in your own algorithms?
I already mentioned principal component analysis. I think that's a very good base approach, but it really depends on the specific data you're working with, because some data sets may have a distribution that, let's say, allows you to use principal component analysis. Some other data may have a distribution that requires just a different one. But the basic approach here is not really which methodology you use. You need to just be aware of any techniques that there is there, and it boils down to all linear algebra, and you can turn the matrix around to make that data disappear and appear again with its information by using these linear algebra techniques. So if you dive into the subject, you'll find then yourself using one or the other techniques based on the specific data. That's peculiar to the data itself.
Hello, Renato. I have one question.
Yes.
Yeah. Do you only model using machine learning, or do you place traits also based on?
No, I actually also use classic quantitative strategies where you can, let's say, translate your strategy within parameters. At the moment I'm building a platform for me to let's say optimize strategies this way, where I honestly could fit also machine learning models, or it doesn't matter. But yeah, this is for optimizing strategy so that you have the grid, the search grid you will do in a hyperparameters into machine learning. I'm building a platform where you can search for the grid within your strategy, and yeah, so I'll be able to decide the signals based on any machine learning model or even any other
So it generates signals and then you place traits based on it.
Say again?
It generates signals and then you can place trade based on that by the same engine. Or it's Algo means it's automatic, or like you have to place it manually?
No. Your trading machine will do everything. Will take the data from the exchange.
Okay, thank you.
No.
Renato, I have a question. I'm Mohit. So you touched a book like Advances in Machine Learning, Advances in Financial Learning the book from Marco, yeah, right? So I also read that book and I'm a great fan of that book. So he touched a great topic. So I used a topic, a triple barrier method from that book, and I classified my label into -1, 0, and +1, like short, no position, or long position. So when I do that, so I am so my label is heavily imbalanced. So how can I come up with that problem? How can I balance my data? Can I use a smart technique to balance my data?
I mean, yeah, you should, slice down your data to have it balanced. Or another thing you could do is to produce synthetic data that has the distribution you want, and so you can train the model on that. Sure, this synthetic data should manifest similar properties than the asset you want to trade on eventually if you are going to train the model. But yeah, I mean, with the tools you have nowadays, there's really no limit about the fact that you can use some statistics parameters from, like, I don't know, variance and a mean from your original data and produce a synthetic data, which actually is a very good thing to do, because it's like testing your model against unseen data that have similar properties, but they are not just those historical data. So you could do that to then end up with a balanced data set to start from.
Okay, thank you.
No worries.
Hello, Renato, can you hear me?
Yes.
Yeah. Simple question, but okay. So thanks for sharing us so far. So I just want to know, so far you only use machine learning to prepare your trades, or you already started the live trading with these machine learning parameters?
I didn't get your question. What's your question? Sorry.
Okay, let's put a simple way. Have you started to use your machine learning optimized parameters for the live trading, for the real trades?
At the very moment, I don't have any strategies trading on machine learning.
Sorry, I couldn't hear you.
At the moment, I don't have any machine learning active strategies, but I'm looking into a particular one and in the process of optimizing. I've just suspended that because I want to complete my platform for the optimization of parameters. So yeah, at the moment, I don't have one.
Okay, thank you so much, Renato, for addressing the queries. Karthik, the stage is yours.
Yeah. Can you hear me?
Yes, I can hear you.
Yeah, let me share my screen now.
A minute, I'll give you the presenter rights.
Yeah, sure. Yeah, so is my screen visible?
Yes, it is.
Yeah, perfect. So let me start. Yeah, good evening, everyone. Good evening, esteemed alumni of QuantInsti. I'm Karthik Jonagadla, a passionate quant researcher, an investor, and a trader. So today, I'm excited to share about the importance of uniqueness in generating alpha and how embracing this key principle has led me to establish the foundations for my quantitative research company, Contest Research. So let's dive in. So what sets me apart in the world of quant is my persistence and experience. I've conducted over 200 failed experiments and spent over 33,000 hours researching quant strategies in the last decade. And throughout my career, I have had the privilege to work with 350,000 retail clients and 25 institutional clients at Antique Stockbroking. Having worked with different clients, I do have access to some unique insights, which is hard for a normal person to replicate. So I'm also a QuantInsti 2017 EPAT alumni. So let's discuss the complex world of investment analysis with a simple example. So how many possible ways are there to create a distinct 10 stock portfolio from Nifty 15 names? There are about 10.273 billion ways to construct, and this is only small piece of the puzzle. In our work, we tackle even more complex problems, such as selecting 20 stocks from a pool of 500 names while incorporating constrained optimization for sectors and also running risk simulations. And what makes this even more intriguing is the fact that we can achieve these complex calculations in a mere 10 to 15 milliseconds. But speed isn't our only concern. The investment world faces a significant challenge where 95% of the actively managed funds underperform the market. And our passion lies in addressing this globally recognized problem along with our advantage of speed and scale. So I'd like to give you a high-level overview of our proprietary three-step algorithm that drives our investment approach. So the first is stock selection. So here, instead of relying on traditional factor investing, which is more of a linear regression methods, like we use non-linear regression methods here. And our process begins with identifying the most promising stocks using market observable data such as price, volume, and open interest by employing end of the day data by the exchanges, like which is kind of vetted since like they are updating it on their sites. So we are able to like avoid the outdated and biased information. And using this information, so we create a relationship between price and market observable data using a method called as clustering. So it is a method where you can analyze group of stocks that perform across market conditions. So you can create clusters based on these market observable data and see like what are the potential future returns. And this method allows us to detect stable clusters of stocks with promising potential, which is kind of less susceptible to sudden market changes. And second is the classic mean variance optimization. So this is the Markowitz approach, like where we also do add some constraints here. So this process ensures that our portfolios strike the perfect balance between risk and reward, allowing us to construct a well-diversified portfolio that maximize expected returns while minimizing risk. And third, and the most crucial aspect is risk management. This, I would say, is 50% of the work we do, which is kind of an aspect like which is neglected by a lot of traditional fund houses and even a lot of say con funds too. So and we utilize two approaches here. Like one is Monte Carlo simulations and other is historical simulation. The prime objective of both these simulations is same. We want to ensure that the portfolio of stocks like which we have out there exhibits volatility that is less than the benchmark itself. So that like we are well prepared to face a black swan event. Black swan event is something like which is not going to like you don't have any prior information to it. Like you don't know that uh, the markets are going to fall by 4-5% tomorrow. So you'll have to be always prepared for it. And we are always prepared for it. That is because of our strong risk management principles like which we follow. So I'd like to briefly discuss about the way we do back testing. So there are a lot of numerical ratios out there like which people kind of uh, tend to use. But I mean, we are very clear about our objective. Our objective is to outperform the benchmark. And what we have done is like right from 2004, right up to September 2021, we have created rolling windows ranging from 3 months to 36 months. And we were able to increase our ability of winning right from say 62% right up to 91%. And our average alpha like which we added over the benchmark like right from say 0.25% to right up to like say 42%. So and this table is in fact like which gave me the confidence like to kind of quit my day job and start my own quantitative research firm, which I've been running for last 1.5 year almost. So we have been live on a third-party independent platform called Smallcase. So since August 2021. So the beauty of this is that like we have been able to translate our backtesting performance into live performance. So if you look at the kind of portfolios we maintain, like we target like every benchmark in India, like be it blue chip, mid cap, small cap, flexi cap, and micro cap, and we were able to add a consistent alpha of 20% over the benchmark, and this is what we have been trying to achieve. So and this I believe is like really important. Like the problem with backtesting is that like a lot of people are unable to translate that backtesting results into live performance. So and that is because of the various biases which goes into backtesting, like right. And one of the basic mistakes like which I see is that like it starts with your data, like cause like it's not aligned properly. Let me just share you an example. For example, like I've seen people using gold as an asset class, but if you look at the gold prices which they pick up, like they pick up from some other market, but the markets in India close by 3:30, but the closing price of gold which they use is like say 11:30 p.m. So if you see like the data is not aligned properly. So a better mechanism here would be to like use gold base instead of say commodity prices, so that like you don't have any say insight information like which is creeping into your back testing. So this is one of the practical examples like which I would say like is going to add tremendous value like once you like align your data properly, like cause like this will help eliminate at least like say 20 to 30% of your alpha, I mean source of alpha like in back testing. And I mean, a lot of people associate momentum with factor investing, but we were able to like create a non-factor momentum, like which we call it contest Chetak, and we are on third-party platform contest. I mean, on small case, and we were able to create an alpha of 30%, where the market literally went nowhere. Like in fact, like over a year's time frame, like it gave negative returns, like say -2%. So the crucial question to ask here is like, why are we able to like occupy top positions in 1, 2, 3, and 5 for long only 1 year account returns on small case? The answer is very simple. So our original work and our non-linear approach is the source of alpha. So the problem is like the more academic research you consume and you try to replicate it, you're not the only person to trying to replicate it. There are a lot of people out there like who are trying to replicate the same piece of information. So I'm not saying that academic research is you say like not worth it or something. It is worth it. Like use it as the source of your inspiration, but not as the final strategy like which you'll be employing uh, in your code. So and also like focus on frequency of data. Like for example, like if you look at traditional factor investing, so they use a lot of fundamental data, but there is a practical problem with fundamental data also, like because like these are updated once a quarter, and if you look at the kind of updates which happen, like many a times companies update these data like backdated say after a month or so, like after it is released. So while you're doing backtesting, are you incorporating this into your backtesting? You'll have to ensure that bias doesn't creep into your backtesting. And one more thing is that I mean, having say a proprietary approach like helps you to like win big. So yeah, it is difficult. Like it took me 200 failed experiments, but when you strike it, like you strike big. And this is really important. Like in an era of say generative AI like ChatGPT and BART, like you can literally create a factor investing Python code using a prompt. Like, I mean, it is just 2 to 3 prompts away. So, and this is the problem. So the more you use academic research for your original work, the ability to add alpha, that ability will shrink with time. In fact, like I mean, there is a study which says that like academic research, whatever gets published, right, like the alpha usually tends to drop like post the research. So post the research is published. So it is a crucial aspect like which you'll have to take into account. And also like use data points like which are say in line and in sync with say current market conditions. So it has to reflect the current market realities. So and the problem is like you'll have to look for data such as alternative data like which is updated say like on a daily basis, and it is better to rely on these than fundamental data. So a lot of people say a lot of factor investing managers like play cute here, and they incorporate say forward estimates. But in my experience, like forward estimates most of the time like gets wrong. I mean they are wrong. So and that again creeps back into your models. So so you'll have to take lot of considerations like these, like so is it worth taking the market estimates into your say analysis? Yes, no. Like if you're taking yes, like how are you handling the bias, etc. And one more thing is like so depend on probabilistic based methods for your margin of safety. For us, the probabilistic based method was this chance of winning. So I knew that like it is only a matter of time for us to like create alpha, and with time like we'll be able to like create alpha. And also like I have a number, I know like by what a number like I might underperform. Say my worst 1% underperformance, like it is in single digit, like say 7 to 8% below the benchmark, which is a number like which I'm happy taking any given day. So because 99% of the time, like I'm above that. And yeah, that's it from my side. Like so my only advice to the alumni would be to like focus on original research, and try to research more, and use academic research as source of your inspiration and not the final work itself.
Can I ask a
Thank you
question?
very much, Karthik. Yes, please ask. Yes.
Okay, yeah, Karthik, thanks for sharing. Maybe my first question is, when you mentioned you showed in the presentation, right? You show the performance, the best performance is about 91%. So may I know that 91% is a just backtesting performance, or is a real live trading performance?
Actually, that is a backtesting performance. So, so over a period of say 3 years. So the thing is like a lot of people have this question as to like how the markets will behave in say next 6 months time frame, or say next 3 years time frame. So what I have observed is that like at least like as far as Indian markets is concerned, in any 3-year rolling window, right, it rarely gave you negative returns. So and in that same 3-year rolling window, like if we are able to like beat the benchmark 90% of the time with an absolute outperformance of 42%, I know that we have a great strategy in hand.
Okay, great. Then I'm just wondering, based on those back testing result, I mean, using parameters, whatever strategy code, have you started started any live trading with those output?
Yeah.
Okay.
Okay, so I actually showed the live performance. Like let me just share it again.
Okay.
Yeah. So yeah. So this is our live performance, like where we actually translated or back testing into live performance. So it's not that like it's a mere fluke, because it's an effort like which went in. So like I told you, there are a lot of common back testing errors like which people do. Like one, the data is not aligned properly. So like if you can address that issue, like that would be great. And two, like even if you're doing factor investing, you'll have to ensure that the data which you are using at that point of time doesn't have any forward corrected data like which is incorporated. So I've seen the best data source providers like even Bloomberg, they cannot handle this problem easily. So and it is a personal say pain like which I actually had to go through, and ultimately like I had discovered that like this was the issue. So I had incorporated a data point as on a particular date, like which was updated, say like 2 to 3 months post that date.
Okay, so so may I know what's the frequency to run the machine learning? Is it monthly or quarterly? What's the frequency?
So since like I'm focusing only on the investment aspect, so I'm using daily close prices. But if you're doing trading, I would suggest that you look at hourly and say 30 minutes also.
So you optimize, you do the machine learning every day, daily basis.
Yeah, exactly. So because we have the advantage of speed and scale, like I covered in the first slide, like 10 to 15 milliseconds is the time it takes for us to create an optimized solution.
So do you have, so what's the ratio between your in-sample data and out-sample data? What's the ratio for the data use for machine learning?
Okay, so we incorporate all the data like which we get into our backtesting. So we don't do the classic in-sample, out-sample method like which people do. But what we do ensure is that like we don't have any forward estimates like which is creeping, not estimates, like forward-looking data like which is creeping into our backtesting. So we would ideally like to have say like longer time frames like built into our back testing. That's because like you need to build a strategy like which is kind of bulletproof over different market conditions, and hence like we preferred using data right from say 2004. So that's because like if you look at it even here, like there is an interesting take. So I was looking for a constituent of say index right from 1992, which I unfortunately didn't get. So Bloomberg provided me right from 2000. So and I use initial 3 years as the testing data, and then right from the 4th year I started like training my model. So and here like what I'd like to again touch upon is that if you look at the benchmark indices, right, the constituents keep changing every quarter, and one of the rookie mistakes which people make is like they take the current constituents and they assume that like these constituents were part of the benchmark right since inception, say to year 2000 or something. So most of the problem lies in the way you backtest. It's not in the backtesting itself.
Okay. Maybe just my last question in some time. Last question. May you share with us which platform are you using for this testing and also live trading?
I use a combination of both Python and MATLAB, and I also like use Amazon AWS for distributed computing. So that is a skill like which I developed over last 4 or 5 years, and which a lot of people don't know. Today, like if you need to like have faster computes, so it is better to take it to cloud and then use distributed computing power at a fraction of a cost rather than investing in servers.
Okay, great. So when you when you create real trades, you manually create the trades or you automated the trades?
Fully automated. So small case as a platform doesn't allow us to like push your trades via API. So we create a CSV files and upload it at the end of the day, like if at all we need to update. But I have designed it in such a way that like it has to be like fully API driven and then like push the trades to any platform. So because that is what automation is, right? Like you don't need any manual effort going in. The more manual effort like you introduce, the more biases like you bring into the system, which is what we try to like eliminate.
So that platform you mentioned, automation platform, you build yourself in Python or?
Yeah, well, I am my own platform for automation. So like which is a combination of Python and MATLAB.
Okay. Thanks. Yeah, in terms of time, leave to other, others. Thank you.
Hello, Karthik. Thank you for sharing your research. So may I know what asset classes you are using for these?
Right now, like so it all depends on the benchmark we are targeting. So if we are saying a blue chip portfolio, like we target the Nifty 50 benchmark and the current constituents. And if it is a say flexi cap portfolio, we target the NSE 500 benchmark and then the constituents. So it is very simple. So a lot of effort, like you can leave the heavy lifting job to like exchanges, and you can use the same exchange constituents and then try to create a system. So I found this is better than rather than putting in all those liquidity filters, etc. Because all these stocks will have to pass certain criteria like mandated by the exchange before being introduced in say FNO or say even the benchmarks, and these are getting reviewed on a daily basis by the exchange. So why not use them?
All these are cash trades. Right?
Yeah, these are long only. Yeah, it doesn't make sense to introduce short in retail.
So this company, you have like a large number of people, or like you are doing alone everything? Just curious.
So we are a 2-member team. So our strength is in our automation, so which I touched upon. So and all the heavy lifting is done on cloud, etc. So and I mean that is what it is. And if at all we hire, like we won't be hiring any fundamental analysts. Like we'll be hiring a lot of data engineers and quantitative analysts.
Thank you.
Hi, Karthik. Can you hear me? I had a question. Can you hear me?
Yeah.
Yeah. Are you using any alternate data also for your clustering, or are you using only the structured data which is provided by the exchange?
So right now I'm using only structured data provided by the exchange, but we do a lot of transformations. So which I didn't talk about. So I don't use the data in its raw form. So we apply a lot of transformations and like we. I'm a kind of guy like who tries to like remove all the biases from the data also. So I mean it's a process like which I kind of created over last decade or so.
Okay.
Hi,
Thanks.
hi, my name is Darshan. I had a couple of questions. So one was regarding the alphas, that you try not to have like look ahead bias, but do you try to put delay on the signals? Let's say, for example, we have tomorrow's signal, yesterday's signal, but we are playing a bet today based on it, just to make the strategy more bulletproof. So what are your views on that?
I've tried delaying my signals, but I mean, unfortunately, like what happened was that I mean, my strategies like kind of underperformed in backtesting. So, which gave me a clear indication that there is no point in delaying the signal. So, when a system gives you a signal, like it's better to listen to the system and then execute it rather than applying your mind. Because, like I told you, like just to create a 10 stock portfolio, there are about 10.27 billion ways. So a system can process large amounts of data like this, which a human mind unfortunately cannot do.
Oh, okay. Cool. So basically, if in the delay, if you have two strategies, one which performs good with delay and another which does not perform so good in delay, then you basically just discard it, even if it performs better in live.
The thing is, like, if delay works, we are more than happy to take it. But I didn't find a delayed system to be working for us. Like, but I mean, working in the sense, like, I've seen our performance reducing by say 1.5%, 1.5 to 2% annually. So which I don't want to like take it.
Okay, got it. And my second question was, you mentioned that the academic research-based strategies, they do not perform well after some time, or basically after publishing. I actually experienced the same, and it's a pretty silly question, but can you direct me towards some of the papers or some reading material where I can like see the proofs for it, or where I can read it out?
I mean, I would actually suggest you to like read Marcos Lopez's book on advances in financial machine learning. In fact, like he talked about some of the subjects like which I spoke today. Like there, like again, like he talks about the biases in fundamental data, the way like these fundamental data points are of quarterly in nature. So this is not something new that like I'm saying. These are already there. I mean, covered in this text. So, like, I would suggest that is a very good starting point to, I mean, start your research. And it's not. I don't exactly remember the name of the paper, but I do remember coming across such a paper, like which talked about. How the alpha kind of reduces like post the publication. So it also intuitively makes sense, right? Like so the more and more people like employ the same methods, right? The alpha shrinks.
Right.
Like I call it the herding effect. So you don't want to be part of that herd, like extracting the same alpha. So that is the reason why like it's very important to have a unique approach. Like I'm not saying that like don't follow that approach, but if you are following that approach, don't expect the same kind of alpha. So which the publish, I mean, the researcher had kind of demonstrated.
Right. Oh, cool. Thank you.
Hello.
So
I also
I
have
have
a
one.
question.
This is Bhavish here. So I just wanted to know what kind of portfolio method you are using. Like, are you using indicator-based model, or you are using any quantitative-based model or fundamental? So what is?
So we use nonlinear methods, so which is part of ML family. So our primary method, like which we use in our portfolio construction, at least for stock selection, is clustering. So which we found it to be like very useful. So and we rely on this method a lot.
And you, as a parameter, you push the OI data and all those kind of like parameter data to the model, is it?
Exactly, yes.
Okay.
Hey, Karthik, I have a question.
Yeah.
Do you use the machine learning model to literally build the composition of your portfolio, and also when to execute the trade to rebalance your portfolio, or you are just classifying weights with that and then using some kind of linear optimization?
So our primary use of ML is in stock selection. So which is the step one, like which I discussed. So our step two is classic mean variance optimization. So there, like we didn't do like any innovation there, to be frank. But our step three, like which is the risk management module, like which is what keeps saving us every day. Like, of course, like, I mean, it is really essential for the set of constituents like which you hold in your portfolio to show like less volatility than the benchmark. So this is very crucial. Like when you're especially like handling the black swan event, like black swan by nature, like no one can predict. So it is better to like make your portfolio in such a way that like it is kind of accounting for a black swan event, and you always know like what is the worst number like which you can see, which can be printed on your portfolio returns. So and that helps us a lot.
Okay, thanks.
Hello, Karthik. Can I ask
Yeah,
a question also?
sure.
How often do you rebalance your portfolio?
So we do monthly rebalancing. So for the ones like which I showed you.
Okay, and I believe that you have more than one strategy in your to build your portfolio, right? It's multiple strategies. Do you follow the decay of each portfolio, each strategy performance, and how do you monitor the decay of the alpha decay?
Okay, and this is where the advantage of cloud computing system like AWS comes in use. Like if you know CloudWatch events, like you can trigger these CloudWatch events, like which will run lambdas on AWS, like which is nothing but like end of the day activity, like which looks at risk numbers, etc. So whenever the system detects an anomaly, like it kinds of like sends a notification to me saying that like hey something is wrong, so better change your portfolio. This is a very rare event. So say it happens say once in 3 year kind of a event, but we are prepared for it. Like overall, overnight, if some situations change drastically, then you'll have to be prepared for the next day. Or maybe like you can get that signal 2 to 3 days prior to the event. So, which is what ML gives you an advantage of.
Okay, and from your presentation, I believe that you only presented data against the Nifty, the Indian equity index, right? Have you backtested your strategy in other markets?
Yeah, so that is an aspect which I didn't touch upon. So we are not geography specific kind of a strategy. So I did test it on other markets like FTSE, SPX, or say KOSPI or Hong Kong HSI. So we were able to kind of consistently outperform the benchmark. So our motto is simple: like go target the benchmark, use the constituents, and then create a minute subset of the constituents and hold it on for next month.
And I believe that the results are the same. Like you outperformance the markets independently of the place that you are placing the benchmark. Okay. Thank you.
Okay. Another quick question for me, Karthik. So on this page, you see the performance here. So the performance here is average performance or is the best performance, or I'm just wondering from since 2021, of course, it's about 3 years, maybe less than 3 years. Was there any year your performance lower than the benchmark?
So it's not that like you'll outperform the benchmark every time. So if you look at our chance of winning, so over a 12-month time frame, like there's only 70% chance. So in a rolling window time frame, so which is a number like which we are happy taking any given day. So in a market where 95% of the funds kind of underperform the market.
Okay, in which year your benchmark is lower than benchmark? In which year your performance is lower than benchmark?
Fortunately, till now, we didn't face a scenario where we printed returns below the benchmark. So, but we did face one scenario for say this particular portfolio of like which is blue chip. So where we had seen seen that like it dropped very drastically. So, but it quickly recovered and then kind of outperformed the benchmark.
Okay. Okay. Thank you. Maybe have you found any reason why in that? After 2022, I think it's March or something. Why your performance suddenly lower than the benchmark? quite heavily?
Okay, that's because I mean it is the nature of the portfolio which we created. So in blue chip, like we take a very concentrated position, like of only 5 stocks. So so that is our biggest source of alpha because blue chips is a space where it is really difficult to create an alpha. In fact, S&P came out with a report as far as Indian markets is concerned, where 95% of the large cap funds were unable to beat the benchmark in last 1.5 years.
Right. Okay, thank you.
Yeah.
All right, excellent. Thank you so much, Karthik, for sharing
Thanks.
your wisdom with everybody. We will, if there are any more further questions, you can just note it down. In case we have time, we will definitely have them answered. Okay. We will now go on with Jesmer Wong. Hi, Jesmer. The stage is yours now.
Good day, everyone. So compare with all the experts in here, I'm just really a newbie compare with everyone. So I just kind of like try to introduce myself. So just kind of graduated from the EPAT for about a year and just trying to start diving myself into this algo trading area. And I would definitely say that, you know, learning from everyone is actually for me tonight to learn from everyone in here. You know, I see and I just heard a lot of technical questions that are going to reflect that, oh, there's a lot more for me to learn. So just allow me to share a little screen from my side.
Sure, I'll give you the presenter rights. Give me a moment. Here you go.
All right. Sorry, I don't know if everyone can see my screen.
Yes, we can see.
All right. So to be honest, I'm not expecting that it's going to be a very expert in terms of the sharing section. So to be honest, I didn't prepare that much. So just a few slides. I don't want to, jeopardize everyone's work. And to be honest, I myself consider it a kind of like a pastime activity because I kind of like just try to start it to build this little event in terms of learning algo trading from my pastime from the interest of the time that kind of during the lockdown. So yeah, so it's about few words in terms of the agenda for today. How come I entered into the realm of algo trading? It's about trying to have some passive incomes and during my pastime for the lockdown. And I feel that because of myself being from engineering background, learning a quite substantial level amount of statistics and in as well as some machine learning and data science related methodologies. So that would be a lesser barrier to entry for finance industry for myself. And then what did I try to prepare for myself in terms of the algo trading world? I would like to say in the EPAT module is actually kind of like an entry ticket to go into the algo trading world. What I usually do is to extend the lessons that I got from the EPAT modules using the MOOC courses. For example, like Coursera, EDX or deeplearning.ai. So these courses will talk a little bit more on the mathematical backgrounds and the knowledges that will dive deep so that you will not hit on the pumps like what Renato said. You have to make sure that the multicollinearity issues when it comes to say choosing different kind of portfolios or just choosing say what kind of distributions that you need to presume. would like to say that there are some different kind of algo trading platforms that currently are available. But for myself, it's kind of like try to find some starting points as from my past time. So I just use the blue shift that is given from QuantInsti with a good level of customer service support. And then there are a lot of opportunities to learn and deep dive more into different news, as well as the blogs in regards to those quant trading strategies, as well as different reference materials or the books or the forums or communities like the alumni community in here. That would definitely help. So my few trading notes that because I just kickstarted on my little journey in terms of doing the algo trading. So just a few notes in here, getting the strategy news and try to implement the Python code that it could be. And then do make sure that try to use different version controls in terms of say when you're trying to deploy a strategy, no matter the very simplest buy and hold, as well as the risk arbitraging. Sometimes the version control is very important in terms of say, well, of course when you are having your platform inside cloud, then it should be helpful when you are using those DevOps or CI/CD related protocols or modules that can help you. But to start something from scratch like me, when trying to get things, get hands dirty, usually try to write some very small functional programs in terms of, say, to let it really run, and then before trying something large. So it's always getting something started to get hands dirty. I think that's the very good step in terms of getting myself started. And then when we try to build a network, neural network of a practical strategies for hyperparameter tuning, what actually means is we try to treat different kind of strategies inside a repo or repository. And then when we call those lists of repositories in terms of the strategies, and then what we need to do is to just to let a hyperparameter optimization library. I usually use Optuna rather than the grid search from sklearn to do the hyperparameter tuning, and then in order to calculate for the ROI. And then sometimes when I try to deploy for the strategies, I always make sure that there's a proper, a prudent thought in terms of the exit strategies first, no matter in terms of the ROI, but on top there may be some level of like trading costs, the max drawdown, etc. These are the critical parameters that we usually need to see. And finally, algo trading is something that keeps away in terms of our sentimental driven decision making stuff. That means we try to do everything in terms of data driven decision making. So we always need to be objective, self-controlled, and be patient in order to find good alphas. And that is the last slide because I didn't expect myself, to be in a very expert level of discussion for tonight. So I just kind of like shorten my sharing here. So the EPAD would be my entry ticket, and just to kickstart on doing algo trading. There's more to learn. And then sometimes we have to be objective driven and to be cautious on every move. And then because I got a pet, so when I feel nervous on the metrics, so I will play with my cat. So that's it. So very short, and hopefully you guys don't mind. Thank you.
So we can start asking your questions, Jesmer.
Yes,
Can you hear me? Jesmer, thanks
Yeah.
for sharing. I think your journey,
Okay.
I'm not sure others, but same, almost same. Yeah. Okay, so maybe just quick. So first question, have you started any live trading already?
I didn't start my lab trading, so I'm just starting to build some of my portfolio optimization codes and using the libraries to do the optimization. And when these things are getting ready, then I'll just put that onto the trading platform. And it's gonna be something that, well, to be honest, I'm trying different things. Not just from the classical computing way, but also like the quantum computing way. I'm trying to see different kinds of machine learning related methods that hopefully can reach better kind of alphas in terms of how to enlarge the alphas with a better way of, doing things like, a more speedy optimization approach. So that's why I'm still in my very first stage in trying to address these kind of libraries that I'm trying to build. Yeah.
Okay, so if I understood you correctly, you have not started live trading yet, right? You just
not yet.
Okay, so maybe just that's some quick words to you. Optimization is good, but also not good. Okay, sometimes I touch it frankly, your optimization may not work in the real world. Even sometimes even you find it even worse because the data curve fitting too much. Okay, that's for my real experience. Just to share with you. Maybe you don't take the best one. Maybe you just take the second best one or third best one. Even you found the third best one could be a best one in the live trading. Okay, okay. So now next question to you: which markets you are focused on? Because I see your Amazon, Apple. You only focus on stock markets, or you also focus on other for example, options, also commodities?
I see. Currently, I'm trying to look into the U.S. equities. Basically, the simplest data that can be accessible. I'm of course, I'm not trying to avoid the options on other options like doing the options trading, because those codings are relatively easy as well. And even in new times in here, when you try to call ChatGPT, it already helped me to write an LSTM model in 10 seconds. So so that's why you can enjoy everything with ChatGPT. It's really a good start in terms of when we try to write some code, but at least you got some framework, and then what you can do is just to fine tune all those little things. No matter you want to tune the hyperparameter, number of layers, the learning rate, the epochs to be trained, and once the guy, which means the ChatGPT, wrote you the framework, you can just fine tune, and it should help you to speed up the coding time. And to be honest, as a data science like me, as from my daily work, usually like 70 to 80% is more on data wrangling. To be honest. So writing model is a very simple job in terms of you can generate within 5 minutes for a model. What you need to do is to build a hyperparameter optimization model on top of these strategy selection. So that's why I usually use Optuna for the model selection, and of course different weights, the nonlinear modeling with Karthik just mentioned, and all those different choices. I'll just let the optimizer to help me to to choose. So I'm kind of like, okay, you're the black box, and just give me the best alpha you can. That's I'm trying to do.
Okay. Yeah. So my last question quickly, when you mentioned hyperparameters. Can you share with us, for example, give us some examples of samples? What kind of hyperparameter you are trying to use?
Sure. That really depends. So if you're really on the time series data, usually the LSTM or the RNN that you are using, then those are very common hyperparameters we usually use, like the learning rates, the number of repetitions, the epoch, the training, whether you need to add additional layers, no matter for the batch normalization, no matter you need to do different kind of scaling, and of course the regularization parameters. These are the very common choices on those machine learning models, particularly for LSTM. Yeah, but there may be some little tweak that you might need to do, because we just kind of learned from some nonlinear modeling from Karthik. I would say that sometimes I would do some callbacks on having some nonlinear modeling in terms of, for example, when we try to add customized functions like the lambda functions, we might try to do some modeling like not just a linear filtering like those sigmoid functions, but we might try to have some other quadratic or even other lambda functions that may try to help, not just the ReLU, not just a sigmoid, and some of those functions can be kind of posing different effects when it comes to those activation functions. Like that's why that there are too many ways or too many things in terms of hyperparameters to tune. But as what I just mentioned, I'll just let Optuna to help me to do the fine tuning, because Optuna use A star to choose different kind of hyperparameters. So that's why that's the best methodology in terms of tree pruning, so that I can do those selections. Let the library to do the selections accordingly. Yeah.
Okay. Thanks. Yeah.
Quick question, Jesmer. Without having to reveal your strategies idea, what are your machine learning models trying to predict? Is it returns or buy-sell signals or anything else?
I have done some buy-sell signals. They are usually, of course, some of them on the back testing in terms of like, in terms of how the ups and downs. But I usually take a few approaches and then do a weight hyperparameter tuning in terms of there's one path on the CNN, which means convolution neural network, to indicate the buy-sell signals in terms of the frequency. And then there's another signal for LSTM. Of course, it's a simple LSTM model for the time series approach. And then on top of that, then I might need a weighting, which means how many percent that I should trust the CNN, or how many percent I should trust the LSTM. Of course, there may be some, very simple linear regressions. Sometimes I always get some of my colleagues from different areas or even in the finance industry saying that, sometimes the regression model works. Sometimes we are using XGBoost, different kind of models that, whatever the models that you can think of, what I need to do is just to, it's just like a cooking pot, when you dump a lot of materials and just, let the cooking pot to cook it for you. That kind of, yeah.
Okay, thanks.
All right.
Thanks,
Thank
Renato.
you. Thank you for sharing, Jesper. We have only 15 minutes to go. We have another session going to start at 8 of certificate in sentiment analysis. So we would have to wrap it a little bit quickly. We have the next speaker with us, Rishikesh. Are you there?
Yeah, hi. Karthik.
Hi. Yes. Could you please take the stage? Yes,
Yeah, sure. Maybe if you can make me presenter as well. Thanks.
Yeah, his camera is not working, so.
Yeah, sorry for that, guys.
Yeah, no problems.
Yeah, can you make me present, please?
Oh yes, sorry. Make your presenter. Give me a minute. Rishikesh is yours. All right. Here you go.
Yeah, thanks. Let me know if you're able to see my screen.
Yes, we are able to see.
Yeah. So, thanks a lot for guys and for giving me the opportunity to talk on this platform. I just see that Renato or Karthik, they have very good experience in this space. So, as compared to that, I'm at a very initial stage, at the initial stage of this learning phase. So, but let me share my journey, what I have learned, and how I approach machine learning to my project. So when I enrolled for effect, so I was just started with finding the most effective way to find a certainty in uncertain situations. As you guys know, these are the very uncertain market, and everyone is trying to find out the certainty out of that. So this is my basically impact project where I try to find out the most effective way to find out the certainty in the uncertain situation. So I tried multiple ways, but what I see is that machine learning is the most effective way to find out the certainty. So my journey started with machine learning, that what is the use of this machine learning thing, and how it will be helpful in a training. So I came across the thing that machine learning helps us to minimize the losses and manage the risk more effectively. And I just
Karthik,
know
I'm
that.
sorry to interrupt you. There is some disturbance in your line. Can you just adjust your using a headphone? Yeah. Just check.
Yeah, I'm using it. Is it better now?
Yes, little better.
Okay. So basically, I was talking about the my journey about the entire thing. So I started impact, and there I came across the machine learning part. So I see that why I have chosen the machine learning for trading is because it minimizes the losses and it manages the risk more effectively. And machine learning has more uh, predictive power compared to other tools available in the market. And in fact, ML use a quick response, quick data analysis to generate the signals out of the data. So basically, I started with knowledge gathering things. So basically, I started with uh, learning the machine learning model. So I learned basic steps, what the steps involved in the machine learning, like it's data collection, then data scaling, and all these basic steps I have learned first. And originally, I started with a linear regression. So basically, that is a basic model that anyone starts with a linear regression first, and then possibly they will proceed with the other linear model. So I learned that as well, and simultaneously, I learned on different models by reading articles from Arian or maybe by watching videos, and by using the effects stuff as well. So that was my learning phase, and after that I tried to use that particular key in my real-time trading. So I choose logistic regression for this purpose. Reason being that it is very easy to interpret and it gives a good accuracy. Because I just saw multiple regression model ML models where I found that logistic regression gives a better result. So I started with the logistic regression, and on that line I have collected data for my project. So initially I used data from say 2009, and this is my project entirely was into the bank industry in the Indian market, and I have started collecting data from 2009. Post which I have just removed two parts of that data, and I have again studied these things. So, so to be honest, guys, I mean, these are the basically research projects for me because I was very new to this project. I was new to this field, so I started with collecting data, maybe which is not useful. But afterwards, I realized that there is no use of that kind of old data. So basically, this project was a trial and error for me, and to be honest, it worked beautifully for now. So I started with the data collection thing, and I came across very yeah, outliers as well in that data. So as per the process, I just removed the outliers from that data and done some standard scalar on that data using that scalar library. And initially, I choose, I mean, almost 24 features, which are basically technical indicators as well as some fundamental indicators. But after doing trial and error basis, I just removed almost 11 features from that list. And currently, my model is based on 13 features. Uh, Similarly, I started splitting the data with 60-40 ratio and then 70-30 ratio. They are tried in many ways, and found out, I guess 70-30 is the best suit for my model. So after that, I mean that once this is finalized, to be honest, feature selection is a very tough part for me because I was studying it and simultaneously applying different features, removing key ones. So, I mean, that was the tough part of my project. But after that, once that is settled, uh, as it is just putting our data into the machine learning model and run. So that was the easiest part. But data selection, data creation, data cleaning, and feature selection took me a very good amount of time in my entire project. Then I have selected, I have picked accuracy scores for my project, and I had done the prediction as well. On next slide, I have just given my model accuracy. So basically, for my model, the accuracy is almost 76%. Uh, the training accuracy was 79, and the actual testing accuracy is 76%. So based on model, this model is basically predicting direction of the market. So based on this direction, I'm checking the trades in the live market based on some technical indicators. Basically, I'm using the RSI indicator, and these are my some paper trading trades that I have taken, which are actually going on live trading. So when I took some paper trades, it gives me giving a good result. So, after that paper trading, I started doing a live trade, and here is the examples that I have tested on this slide. So, I mean, to be honest, I mean, the winning ratio is very good. Hit ratio is almost 71% for my model. And risk management strategies that I use is basically a stop loss because currently I'm just playing with very small capital, right? So I'm just not taking hedge position, but I took the hedge position a couple of times. But stop loss is more basically risk management strategy. And this is my alpha that I am synthetic from last few months. So basically, in Jan, I got 4.32% return on my capital in space for 5.4%. But last month, unfortunately, something went wrong and I'm able to just generate 2.56% of alpha on that thing. And currently, I'm just improving my model uh, by just adding few more features in these things and removing the existing features. So I'm just working on that as well soon. And even I need to work on the hyperparameter tuning part on for this model. And simultaneously, I came across the LSTM model. I guess that is a very good model that I need to explore more. So maybe I will work on that model and try to just add this feature in that model as well. So that is very small journey for me. I guess I'm still in the initial phase as compared to you guys because you guys are very experienced. So that's it from my side as well.
Okay, excellent. Thank you very much, Rishikesh, for sharing your journey. No journey is a small journey. Every journey has to begin somewhere. So thank you for sharing your journey. Anybody has any questions for Rishikesh?
Maybe just quick one in some time. So thanks for sharing. You mentioned the 24 features reduced to 13 features. So maybe you can share something with us, your experience. What's the 24 features? Then why suddenly reduced to 13 features? So you are sure the 13 features is best features? Is the best features to use?
See, the thing is that I started with the 24 features and that result was very good, to be honest. I mean, and I was doing some research on that part. It was basically a trial and error. I was removing two features and adding each other. So that was basically trial and error thing. And simultaneously, I was checking the accuracy of my model. And I finalized that 13 features, but still, as I mentioned, I'm still working on that part. Or maybe I will find few more features as well, or maybe I have to remove few more features to make this model more accurate.
So you mentioned you also you try to use this machine learning to find the patterns, right? To treat.
Yeah, that's
so.
Right.
Can you what? So maybe just give some examples. What kind of patterns have you found from your machine learning?
Sorry, I didn't get your question. Can you repeat?
The pattern. You mean because you see because some patterns is not easy to find manually, right? That's why you use machine learning to find those patterns to treat.
Yeah.
So, what kind of patterns you have found with your machine learning? The pattern. What kind of patterns you found from your machine learning, from historical data, to treat those patterns? Oh no, you just use machine learning to. I mean, you train the model to. Okay, go ahead.
Yeah, I just use the Python for machine learning role and just to read the data and see kind of the signals.
Okay, because I saw your presentation, you use one feature called RSI.
Yeah, technical indicator. Yeah, that's right.
Any other because you have 13 features, all the 13 features are technical indicators, or you have other fundamental or some other features?
Yeah, so that's what I mentioned. I started with many features. So those include the fundamental as well as tech features, as well as I'm using some other indicators as well. So these are basically a combination of you can say a fundamental as well as technical.
Oh, so you have both fundamental and technical. Okay.
Yeah, both. Yeah, right.
Okay. But if because normally fundamental data is not the daily update, right? You have to wait for either
Correct.
most of
I mean,
quarterly,
yeah,
right?
yeah, you're right. I mean, basically, those are the static data. So we have to wait for after 3 months to get this data updated. So mainly, we can say that the driving factors are the technical indicators, but yes, even fundamental indicators play some kind of role in the prediction.
Okay. Okay, thank you. Yeah.
So I have one question. So are you automatically placing the thread from your system, or you are manually punching them as your system generates the signal?
No, for time being, I'm just placing it manually, but to generate a signal, I'm using another Python code where it generates a signal based on that RSI indicator. So I am using that Python code to generate the signal for entry and exit, and I'm punching the trace manually.
Okay, and what is the data? So are you using data from backtesting? Like how did you, is it the options data?
No. Basically, I mentioned that basically a bank Nifty project. So I am using the bank Nifty index to do the entire study and to predict the model also.
Okay, so you are just using the bank Nifty index.
Yeah.
Data basically.
Yeah. So my project is restricted to the bank Nifty only. So I'm just currently
Okay,
working
futures.
on
So
this.
you are basically trading in futures.
Sorry.
So you are trading, or you trade which instrument?
Option only. Yeah.
Okay, but you are backtesting on futures or index data.
Index data only. So basically, I'm using the index data and I'm punching the option trade based on my market direction. Basically, I'm taking the directional trade.
Okay, got it. Buying system basically.
Yeah.
Okay, thanks.
All right. I'm sorry to interrupt the discussion here. I think we will have to close down right now. But before we go, I would just like to tell everybody that currently there is another initiative going on for EPAT alumni, that we have got ePassion fund allocation for strategies. I believe you must have got an email. If anybody wants to know more about the ePassion fund allocation initiative, you can write to alumni.cell, and if you want to know more details about it, you can write to us and we will share more details about it. If you have a great strategy, working strategy, and you would like to receive funds for your strategy, we have an initiative on that front. So that is going on. Second is that yesterday we had we had a session on chat GPT machine learning. Okay, so you can go through that. I'll post the link over here on the chat, so you can definitely go through that. It's for everybody. Okay, and there's just one request to everyone, is that if you can just switch on, everybody can switch on your cameras. I can just take a picture of all of you attending. That would be really wonderful. Okay, and we will be also forming a WhatsApp group so that you can further discuss about machine learning, help each other out if you are getting stuck specifically to machine learning. So there will be a specific group that will be formed on WhatsApp group for machine learning. You can take your discussion over there also. So whoever is interested can just say yes in the feedback survey, and we will share the link with you. Okay, this is specifically for only EPAT alumni attendees only, and those who listen to the recording and post that they share their request, we will share the link with them. Okay. Yes, so let's switch on the cameras. If you can, please switch on your cameras. We will just like to take one snapshot of yours. Everybody, we had, I think it's weekend, most of you have already left. It was, thank you very much. It was a long session, I understand. Thanks for attending, everybody. Special thanks to EPAT speakers, Renato, Jesmer, Karthik, and Rishikesh. Thank you so much for giving your wisdom to everybody. Some more, please, if you can. Thank you, Shivam and Rishi, for switching on the cameras. Anybody more? Anyone else is okay joining? So I'll just count 1, 2, and 3, and let's smile. Let's take a cheese, and let's take a photograph. Okay. So 1, 2, 3, cheese. Thank you so much. I've taken the picture, and it was lovely attending. Thank you very much. Thank you all for attending. We have to go for another session quickly. Thank you. Have a great day ahead, and we'll all stay in touch. Thanks so much. Bye bye.
Thank you.
All the best. Bye.
Bye.